First question. What does it take to understand a balance sheet? To understand a balance sheet, you have to understand liabilities, which are what you owe to others. You have to understand assets, which are what you owe. And you have to understand owner's equity, which is your assets minus your liabilities. So it's whatever's your net worth, essentially. Second question. What is the accounting equation? The accounting equation is your assets equal to your liabilities plus owner equity. Okay. Third question. What are the components of a balance sheet? Again, a balance sheet consists of assets, liabilities, and owner's equity. Fourth question. What assets can be listed on a balance sheet? Any asset that is owned by the company, or anything of value that is owned by the company. This doesn't necessarily include employees, because employees aren't necessarily owned by the company, although their contracts are. For an asset to be, or for something to be included as an asset, it must also hold monetary value to the company. And along those lines, the item must have a measured value. Okay, fifth question. What are short-term assets? Short-term assets are assets that can be sold within a year. So anything that can be liquidated fairly quickly and turned into cash. Including inventory, supplies, and then obviously cash. Okay, sixth question. What are long-term assets? Long-term assets are typically something that cannot be sold within a year. Something that has a relatively long life. So like property, a factory, equipment, or certain types of equipment. Definitely buildings. Okay. Seventh question. What is an intangible asset? Intangible asset would be something like a trademark or a copyright. There's something that you can't necessarily hold in your hand, but they do have monetary value. Okay. Our eighth question is, what are liabilities? Liabilities would be something that you owe others. So this would be like a debt for trying to you take a loan to pay off a house, and that would be something that would be a liability because you have to pay that. It's something you owe to someone else. They can be categorized into long-term and short-term also. Ninth question. What is owner's equity? So owner's equity is something that results from your assets being subtracted by your liability. So it's whatever's left over. It's your net worth. Includes cash, or a lot of times it'll be like cash and your owner's equity. Yeah. Forget that last part. Okay. How do you classify transactions in a balance sheet? You classify transactions under three categories. You would have it under assets, liabilities, and owner equity. Loss and profits would be classified under equity typically, and I don't think that's right. Well, anyway, a profit or taking a hit on something could go under equity, but something you owe to others would go under liabilities, or a debt. And yeah. 11th question. What happens to a balance sheet when Sam invests money in a company? When Sam invests money into his company, the first thing that will happen is the cash will increase under your assets. If your cash increases, you must also increase your owner equity. So that'll balance the equation, and your assets and owner equity plus liabilities will be equal. And that is week 2.